Alright, hello folks, I'm L.A. Little and this is your daily TA wrap, where we take a look at these markets and we do it from a neoclassical perspective, each time asking ourselves, what did the markets tell us today? And what does it forecast for the coming ones? I do this show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the beautiful Rocky Mountains, folks. We had a sideways day, and if you're a bull, you got to like what you see out here. It did work lower, but nothing huge. Let's start here. Dow Jones, 16,633, down 42, down 0.25%. S&P's down just slightly, 0.1%. 1909.78, dropped 2 points. Composite, and actually the S&P hit that other target, which was the high on the weekly. So the S&Ps now have finished off 3 ABCD structures on the way on the top side here. So they've done what they were supposed to do with regards to that. The composite up 12 points, down 12 points, 42.25, quarter percent basically on the NDX, 37.12, and we lost about 0.5% on the Russell, 11.36 3/4. Gold, silver, those were down again. They're trying to break down, but they just don't want to quite do it yet. Gold has, silver hasn't. Oil comes off $1 today, percent. And the big news out here again today is the news that we've had for a long time, and that is the bonds. If you look at the bonds, these guys are like on a mission. Up 1.2, over a full point, almost 1%. Long bonds, shorter term durations, 10-year, up 0.5%. So bonds still chugging on north. Let's look at the markets. Let's see what they have to tell us. I've got a few questions already queued up, so I'll try to leave some time to get to those. And we'll probably have time because there's actually not all that much to talk about with respect to the markets, because they really didn't do anything wrong today. If you're a bull, you got to like what they did, and that is they hung up here at the highs just as you would want them to. And so much of this is a result of the expectation that we're going to see of another flood of money coming out of the central bankers, particularly in Europe, and easing maneuvers in China. That's the talk this evening in China. So they're telecasting more easing there. You still got Japan as a wild card to potentially even ease again. And so it's a flood of money coming at the markets one more time. And how many times are they going to do it? I have no idea. But every time they do it, they typically end up jacking up the equity markets as a result. And that again is what's happening. So I had a question, and I'll take it here on the GSPC, the S&P 500, and it had to do with ABCD structures. I've gone over this before. I do 2 things differently than most people. One thing is I use percentage weightings. I don't use arithmetic. So when I'm doing the counts and I'm saying what is A to B, I want a percentage move of A to B, and then I want to project that percentage on the C to the D port of it. So if we have an ABC structure, and we'll just take this one, I want to take a percentage. I want this to be a percentage and that one to be an equal percentage. Now, when you don't have large numbers, that percentage is almost the same as the arithmetic. It's not going to be very different. It's when you have large differences, in other words, large percentage moves, then they get skewed, and it's important to look at the percentages. So, a lot of times when you see me drawing here, I'm just drawing straight arithmetic type moves because I know they're about the same. But every now and then you'll see me stop back up, pull out my spreadsheet, and actually do it on a percentage basis as needed. The other piece of the question, the other part of the ABCD structure that I do quite differently, that is that most people, you saw how I just drew this one, and what I'm looking for is I'm looking for a low, right? A defined low that then moves to some sort of a high, and that high actually has a higher high than some subsequent bars of which there's a lower low. In other words, this low gets undercut here, and this high is still lower than that high. It could have been the next bar, it could be the second bar, could be the third bar. It doesn't matter where it is. I just want that scenario, and when I see that scenario, that gives me my B point, right? So my A point is the low, and this is on an ABCD to the north, right? You can have the exact same thing to the south on a bearish one. So you get an A, a B, and the C is when I get the lowest low, and a lot of times it ends up being a low, a swing point low. I get the lowest low, and I end up getting something that goes back over that B point. Once I get that, and I don't look for a close, I just look for a higher high. Once I get that, that tells me I have a potential ABCD structure. Now, as long as this doesn't get undercut, this still is the ABCD, right? And we're looking for that projection, and it may take a long time to get there, and that's exactly what it did in this case, right? It's just finally getting up there. It's not quite there on this particular one, it looks like. And I could actually do the numbers here real quick. That's 1814, top was 84, so that's roughly 70 points. 70 points onto this gets you about 20. So 1920 is this target, and that's the one that's left outstanding. The 1914 was a weekly that got completed, but that's how I do the ABCD structures for that question that was emailed or asked of me. Okay, so we go up, over, under, right? That's usually that can be a 2-bar reversal. It can be an over-under. 2-bar reversal requires it to be extended. Extended really isn't that well defined. I suspect one of these days I'll get to where I actually define it somehow, but right now I don't. I just look at them and give you my take on what they are. I suspect there is some rules that we can put together, and once I have enough time to do research, I'll probably do that. But it is over-under. I don't think it is a 2-bar reversal. It's not far enough up, and it's definitely not a 2-bar reversal for another reason, and that is that the volume actually expanded. It didn't shrink. You can't have a true reversal or even an over-under that has any value to it unless the volume actually shrinks. We got neither. This can go higher. If we look at the, let's go to the NASDAQ next. Now on the NASDAQ, this guy was actually an inside day, 42.37 yesterday. No, actually went over it. So went over it, back under it, had slightly less volume. So the NASDAQ actually is an over-under. It's getting a little extended. I wouldn't say it's extended yet, and the reason I say that is it really is a function of time and price. And so, you know, this thing has been in a range for a long time. It finally just broke out of the range. Extended to me would be somewhere up here, right? And we're not even close. So it is an over-under, but it's not a 2-bar reversal in my book. So yeah, we can retrace, but also realize, you know, we already had 2 highs taken out. What does that usually do? That gives you 2 to 3 bars to the upside on the, you know, because this was a breakout to the north. It gives you 2 to 3 bars extension, right? So we have, in this case, we have bar 1, bar 2, and actually this was the break of this one. Now we have that, so we can actually get 2 more bars. So we're actually on bar 1 of these, bar 2 of this one, although, you know, I would expect 3 bars out of it. You got 1 going on, you probably got a couple more to come. And if I look up here and I see where the resistance is that's significant, it's up there. So I wouldn't be surprised to see this thing, even with this little over-under, to still try to stretch up again tomorrow. That's the NASDAQ. The NDX, I think, looks just about the same, except the only thing that's majorly different is this one's going after the last swing point high of significance in terms of wide price spread, high volume breakdown bar. Top of the guy's 37.17. You got over it. You stayed over it today. 37.12. You closed. You went over it again today, but you closed under it. Less volume, of course. That one looks like a failure, and this one's starting to get extended. Not quite, but starting to. So that's definitely an over-under. Could get a pullback on the NDX. If you get a pullback on the NDX, I'd be very interested to see if we can get a continuation on the NASDAQ. Now, when I go back, I want to go back real quick to the NASDAQ. You know, when I say 2 to 3 bars, you know, the research does not say that those bars have to extend higher every day. What the research says is that they stay above this area for 2 to 3 bars. So it could actually just go sideways and still fulfill the 2 to 3 bar extension. So that's important to realize. It doesn't mean it has to leg higher and higher and higher. It just means that it doesn't come right back, right? And typically it is legging a little bit higher. But you know, just to make that clear, because a lot of times people get confused about that, and it's you know, it's a definition I've created, so I have to try to explain it. Russell has 2 bars as well. The Russell did come back immediately into these 2 bars. The top of this one, 1137.80. We closed at 1136.68, so we're back inside of it. We're still 36.95. Actually, we're back inside both of them. So the Russell actually fades back in and starts doing a retest regen immediately, even after doing a breakout. And so that retest regen is in here. You really want to see the Russell extend tomorrow and not come back in any farther. It's kind of a key thing. You did have higher volume today. It was an inside bar today. So we'll see if tomorrow this thing can push up. Given the other pieces out here, it wouldn't surprise me if it tried to push up again tomorrow. But the Russell, you know, this is the Russell. The Russell has been this way for 5-6 months now, so actually longer than that. It's been the weakest one. It continues to be the weakest one. This, to me, is the one you have to watch, because this one will give you the clearest signal if we're coming back down again. And the Dow, not really anything happening there. It's just kind of struggling. So that is the indexes. All in all, indexes don't look too bad. They're, you know, they pushed up quite a ways. They're taking a little rest after a big breakout. But they, you know, like I said before, what you want to see is you want to see them extend higher, because they will come back to retest and try to regen, and they have a much better chance if they extend higher before they try it. The Russell's already trying it now, and that's not a particularly good sign. IYT, man, you talk about volume expanding. Look at this guy. So now this is the completion of 2 ABCD structures on the way up, and I'll draw them in right quick again. We've got one here. That's your A point, your B point back down, and then your C point was there, and that one already extended, and then that actually had another one inside of it that more than extended. Now you have this one that just more than extended, right? And now you have one more inside of that one that just extended and overextended, and you got volume expansion. And if you put one more up here, you actually have this one that actually completed as well. So I believe you have seen the IYT do what it's going to do today. I believe it just played out with this large high volume press after a big move and after multiple ABCD structures extend and complete. So that probably is going to set up some sort of a range trade. We'll have to see where that range is going to come back to. Let's quickly flop it over and look at it on a weekly and see what that looks like. So the volume is going to be decent on the week. Yeah, there's no place at 136.50 on the way back. That brings you all the way back into this area. So that looks like it's done what it's probably going to do. So the IYT, I don't believe, is going to help this market climb higher after what I saw today. SOX going for the highs. Doesn't have the volume. It's going to try to tag on tomorrow, 81.60. And if you look over at the Taiwan's doing the same thing. So 81.60, actually it did tag it today. 81.61, went over it, tagged it, failed. I missed that, so that is a failure. So that one actually could come back as well. Actually, it's not. I had a note to myself, it's almost to the highs. And I don't know if you realize it, but all the members, you have access to all my notes because these are shared lists. You can always pop in here and see my notes the day, you know, as I'm talking, if you want to watch along as I'm talking, or if you want to just review them the next day. So the SOX actually is a test failure of the highs. Let me jot that in right quick. All right, and then what else we got here? So okay, so XLB. The XLB goes up and test fails on the highs as well. And so if we look at that one, XLB, oops, got to type it in right. So we go up to the highs, we test fail on the highs. We actually have some decent volume, but not quite enough. So that one also has failed. So that's the first three indexes, sectors, telling us that they can't, probably are not going to contribute to higher. XLE can actually go higher. It's just range trading. So struggling, but still up there. XLF got over 2 swing points. If you remember, today was bar. Well, this one actually slid back into these bars today. 22.22 closes underneath it. 22.19 still over this one. Yeah, easily over that one. So that was 22. Actually, at the highs, 22.19. So, but the volume was decent today. So I expect this one's going to try to push again tomorrow. If the XLF actually starts pushing and pushes up to test that 4.4 breakdown bar finally, and right now it looks like it's going to try, then that would actually, being one of the largest sectors, actually the largest sector, I believe. If technology is probably the largest, it's the second largest. Those two, if they continue, can certainly push this thing higher. XLI, so XLF looks okay. XLI test fails at the highs, but it has volume. Should try again tomorrow. XLK, which is technology, still pushing, has volume today, even though it's an over-under, it can test again tomorrow. So that one still could put a little bit more juice. XLP, XLU really not doing anything. XLV is up to those highs and fells on them, has no volume. That one looks like it wants to come back. XLY does look like it can try to climb a little bit more, had some volume today. So sectors pretty mixed, a little bit extended on the dailies, and we've only got half of them max that are going to try to push more. And those are fairly extended with the exception of the XLF and the XLI. On the indexes, they look like they could push a little bit more. You got some tired ones in terms of the NDX and the IXIC. Russell is a little bit of a toss-up. So you can see they're pushed as well. Mixed as well. And let's pop over and look at the bonds. These bonds are something else. If you haven't seen, there was a great piece that one of the members turned us on to. Where was it here? Bond melt up. You listen to this video if you haven't already. It's worth a listen. I think it's Gunlock is the gentleman's name. I can't remember exactly. I believe it was Gunlock. And anyway, he talked about the scenario of a bond melt up and why and how and all that business. Yeah, Gunlock. And so, if you haven't seen the video, you might want to check it out. It's an interesting video. So getting back to the bonds here, the bonds are melting up and they continue to melt up. Today, volume wasn't quite as high, but it is another ABCD structure finishing up to the to the upside. And we've had them over and over and over in this market. Now, this one's got a little bit farther to go in terms of the extension, but if I pull over the weekly, remember you got some big resistance in this area, and it is pushing right into it. 114.08 today, 114.76 closes over it into this high. That high is 114.66, gets over it as well. Yeah, volume is going to be okay on the week, but not as much as what it's going into. So this may still turn. It's already finished off ABCD structures to the upside. And so when you look at all these things, you would say, hey, this thing should come back. Well, so far it hasn't. So far it just keeps pushing. And so that's the bonds. Bonds keep pushing. And I think, I used to be saying, hey, bonds pushing, that can only mean one thing. Markets are going down. Well, Gunlock points out that there's huge demand for these. There's not as much government debt being issued. And there's a lot of regulations that force you to buy this thing if you're at various types of institutions. Therefore, in the Fed, even though they're buying less of them, they're still buying a bunch of them. So there's not enough of them. And that's what's causing it, right? And, it's classic supply demand. And that's a as strange as it may sound, and I guess to some extent that's what the Fed wants. They want bond rates to be zero. They want to punish any savers. They want inflation. They want money sloshing around the system as much as they can. And, to get bond rates going down is exactly what they want. Now, that actually brings up another point we haven't talked about that much. I've talked about it before. And, imagine, whether this is the bond market, the stock market, whatever, everything is doing this, right? For the most part. It's just going up and up and up. That endless bid that we keep seeing in the market, where does that come from? Well, a large piece of that is a result of this. And what do I mean by that? I don't mean that people are coming out of bonds and going into stocks. That's not what I mean at all. I mean that corporations can issue shares, not shares, but bonds themselves, corporate bonds, and issue them at very low rates, right? Extremely low rates. And what do? They turn around, they take the money that they issue, they flip it around, and they do what? They buy their stocks, right? And they push their stock up higher. And Apple is probably the best example of it. Apple's going to, issue a bunch of bonds, do a big dividend payback, and split their shares. And what's happening to them? They've gone up 20%, 25% ever since it was announced. This was the earnings. It had nothing to do with earnings. Earnings were, normal. If they hadn't done all that other stuff, there's no way it would be doing this. That's what Icon wanted. That's what he pushed them into doing. That's what they did. That's the endless bid we keep seeing in the market. Just look down the list of all the big stocks. Every one of them have buybacks. Every one of them issuing bonds. And it's not just junk bonds. It's just bonds in general. And if we look at junk bonds, you can get a feel for it. They're trading at highs. Right? This is the worst stuff you can buy, yet they're at highs. There's no fear of buying this junk. Right? And it's called junk for a reason, because it can go bad quickly. But yet, why do they keep pushing into it? For the yield. Because they can't get it anywhere else. That's a symptom of the endless bid. All right, let's go. I had a question about gold as well, so let's push over to gold right quick. Okay, so gold broke 3 swing point lows, right? And what you should get, this is just the opposite of what we were talking about a while ago with the indexes pushing over the other way. Gold breaks here, and what should you get? You should get 2 to 3 bars extension. That's what it's doing. It's bar 1 today. 2 to 3 bars would be, somewhere in here, extension, and then you come back up and do a retest regen off that swing point low that you broke. And I suspect that is what we'll probably see gold do. Now, if gold trades 6 bars down here, which is very possible given the way this is broken, then that first push back into the low of the swing point low is probably going to be sold. And then you come back down and you try to set up an ABCD extension to the downside. That's the way those things work. That is what retest regen means. We'll see how this plays out, but that's gold. Now, the question actually was on GDX, when to buy the GDX. Well, if gold's breaking down, I don't want to get too excited about the GDX. And the GDX actually did the same thing, broke down on 2 swing points as well. Volume expands. And yeah, it wasn't quite as much as here. Actually, it probably was. 38 million, broke it with 42. So you break with volume, you break multiple swing points, right? And you're heading south. What is that? 2 to 3 bars extension. So I wouldn't even think about it until you get the 2 to 3 bars extension. You got a low here, 22.21. 22.04 today, so it's under it. It's coming into the high of this high volume bar, 21.88. Folks, this is going to test the lows. So if you want to buy this, just be patient and wait. It's not the time. Unless you're trying to put on a quick trade, make a quick, 1 or 2% or something. But that's dangerous. I think at best you wait for it to test the lows, and then potentially you buy the test that fails on lighter volume if that occurs. Or you wait for it to go back up, test this breakdown area that it just broke, right? And then you try to buy it. If you're trying to buy that bottom, just measure your ABCD structures. You got one here, and it looks to me like it's going to take it right to the lows. And you can do the numbers, but that looks, just eyeballing it, that looks about to the lows. So that's where I would expect this to extend to, and I wouldn't even think about it until there, unless you want to short it on the bounce. And I know you asked to buy it, but I'm just pointing that out. So that was one thing. The other question was the VIX. Let's look at the VIX, not the fix, but the VIX. Fix, weekly, comfort systems. I didn't even know that existed. FIX, interesting. VIX, okay, so what's the VIX doing? The VIX is under all the lows, right? Breaks them, under all the lows. This is kind of odd. Why is the arrows upside down? I'm confused looking at this chart. I guess I'll have to look into that. That seems exactly backwards. It should be pointing down, not up. But anyway, I know why. Because all the volumes are zero. We can't do calculations. Even though we have some of these in the database, you have to ignore, you know, the qualified part of the trend, right? Because it doesn't know how to evaluate it, and it screws it all up. Actually, I probably should at least fix it to be ambivalent or something if we don't have volume. That's something for the future, I guess. Anyway, it's at the lows. Yeah, there's no volatility. And you know, folks that see this kind of stuff, you know, the ideal is that, hey, okay, this thing's at relative lows. It shouldn't be down here. This thing has to pick up. Okay, if volatility picks up, what's going to happen? The market is probably going to crash back down, right? That's the idea. Maybe, but you know, for all I know, this thing can wallow down here for 3 weeks. I've never found real value other than a blunt indicator with respect to the VIX. So it's not something I can read and tell you much about other than the fact that, yeah, it's at the lows. I don't know how long it'll stay there. Let's see. The other question I see over here is G-log. Let's see what this one looks like. So G-log is gas log, which is a shipper of natural gas overseas. It came down today, and in this week it's testing these lows again. It had earnings, traded lower on earnings. Let me see, the low today, 22.90 on that earnings day. Today got underneath it, closes over it. So let me see, we got 4.4, that's 2.25 roughly, 5 times would be 12, 13, about 13 and a quarter million. And yeah, so it's actually got more volume as it's pressing down. Let me see, did I do that right? 4.4, double that is 8.8, 10. Yeah, I did it wrong. It's about 11. So 11 into 10.5. So it's going to have just about as much volume. So you're trading off the weekly, you say, Federico. So I would be very careful here not to let this go underneath. I wouldn't let it close underneath here. You know, I'd cut my losses if it closes under this bar on the weekly. 23.05. That seems to be kind of a key area here. Let me see what the daily looked like today. So you got under, you didn't get under. You traded under here. Yeah, it's kind of dangerous still. Yeah, this thing needs to push up to stay into it for the week. All right, I've run out of time. Tomorrow looks like a mixed day. Potentially they could try to squeeze it a little bit higher. There's some things arguing that we should try to go higher, and that is the multiple swing point breaks on the top side. If those play out, maybe we'll get another day. But this market wants to, pull back in here probably pretty soon. So I wouldn't get too excited if you're trying to play the long side. Wait for the retrace. That's the buy, not the breakout. Till next time, folks, have a great one. I appreciate you being there. If you got a chance, tell a friend. Maybe tell two. Tell them what I do, how I try to help you. I'm LA. This is, and it was, your daily TA Wrap. Have yourself a great night, and I'll see you next time. Take care.